So the last time I did my analysis, I did it hoping that the market was going to get to this point. You can see that in the other videos I posted. So what really happened here was the market came all the way down, and this is where the market is at. So let's analyze this from this drop. Coming from this drop, you can see that we have a peak here. We have the A, we have B, C, and then D. And then you see the market gave us a break of this resistance by this candle. So our take profit expected to be at this point. But what happened? The market never got there, as you can see. The market came all the way, never got there, and then started dropping. Now the market is dropping. So we had to analyze the movement of the market. The market kept giving us structures and going up, giving us structures and going up. You see, the market left this low, got to this high, and then we traced back to the low, a higher low, and then a higher high, and then another higher low, and then a higher high that shares the same level with these other points. So we have this as our most effective low, this as our most effective low, and this as our most effective low. So what did we do next? We dropped down to the 4-hour chart. As you can see, the market gave us, when you come down to these points, these are fair value gaps. These are fair value gaps the market gave to us. Fair value gaps when we had a breakout. As you know, I always enter my market when the market retraces to a fair value gap. We have a fair value gap here, we have a fair value gap here, a fair value gap here, a fair value gap here. The fair value gaps we have here are not on this time frame. They are on 1 hour, 30 minutes, and some are on 5 minutes. Okay, so I'm not going to drive that far to break down the fair value gaps. Okay, so now let's go to the main activity. Let's go to the main activity. So what happened? Now the market has gotten to a low point. We cannot predict the market. All we need to do now is just to analyze the market and see where the market is likely to reverse from. So like I said, this first fair value gap, what happened? You see the market, when the market got to this first fair value gap, it went up, came back down, and then went up, but fell below this point, and then went down and touched the next fair value gap. And what happened? It went up again, but just below this point. And then what did the market do? Came next to it moved to the next fair value gap, and what happened? The market still retraced back up again. And so my expectation now is that the next fair value gap I see so far is this. And so I've written it here. You can see I wrote fair value gap below. The gray zone here is the fair value gap. So the market is likely to get to this place. It's likely to get to this place. We have another level at this point here. We have a target profit here that meets each other, 161.8, 161.8. This is where the market is at presently. So there are chances that the market will reverse from this point, or there are chances that the market will go downward, and then proceed onward. So the market could reverse from here, or to get to this fair value gap before buying again. But now that is what I expect the market to do, nothing more, nothing less. So because we've done our analysis using our Fibonacci, and we've seen our target profits 161.8, 161.8, and that is where the market is at the moment. So for now, being that the market is here, what do we expect? We really don't have much to do again. All we need to do is just wait for the market to get to either reverse or to get to this zone. So for now, all we need to do is just draw our box. We'll box our structure. Okay, let's do this. We'll box our structure like so for our. Then we'll now box the structure closest to the price. And so far this is what we have. So all we have to do now is wait for this breakout to occur above this, if it would, or expect the market to get down to this point. So either of this will happen, but I believe that if the market does not reverse from here, then it's likely to get down to this point. If the market reverses from here, there are high chances that it will buy to this point. If it reverses from here, it may just retrace to this point and continue down. Otherwise, the market will come to this level and give us something good, because this level too gives us another two other 161.8. We have 161.8 here. The market has gotten to that point. Now we have another 161.8 that also falls at the fair value gap point. So that is what is likely to happen. So for now, we just sit on our hands and wait for the market to do what it does best. So expectation is that we either get a breakout here, or the market comes here, forms a structure going on, and then breaks that structure, and then we'll take our trade all the way down to the fair value gap. Now that is what I can see.